They tried to push the market down this week, and they failed. Welcome to today's market recap, guys, on the Forex and Futures and SPY edition of the S&P 500 here. What an incredible, amazing week it's been. Today was an especially powerful, strong session, and I think a lot of people got stuck on the wrong side of the market today. All right. So guys, to start off, what you're seeing on the screen right now is the volume indicator layered onto the chart of the S&P 500. Remember, you can trade this global benchmark via Forex, SPX 500, via the S&P E-minis, or the SPY, day trading SPY options. Is awesome this week. And essentially what this volume indicator does, guys, is it can predict the trend, okay, before the trend actually starts. Okay, now why is that information useful? Why is it valuable? Why do you care about knowing the trend? Well, newsflash, folks, if you want to make money and you want to succeed at trading and speculating in the market, you got to get the direction right. If you fail at any point in your career of getting the direction right, you're never going to make any progress in your trading. Getting the direction right, knowing when to be a buyer and knowing when to be a seller, is the number one most critical factor that's going to determine your success or determine your failure. Remember, guys, 95% of traders fail, and they fail miserably. You already know that. Okay? Why is it that so many of them fail? Well, it's because they're looking at stuff like this: candlesticks, indicators, Bollinger Bands, stochastics, all this useful nonsense. All right? You don't need any of it. All you need is volume to get the direction right with a shockingly high degree of accuracy. Okay? I mean, on trend days like we've had the last 2 days, you won't even believe it. Right? But anyway, so look, a lot of guys were trying to short this market. They've been betting against the market, and retail traders have been buying puts. They've been taking out short positions, hoping and praying that the S&P is going to sell off. Now, I'm convinced at some point the S&P 500 will sell off. All right? But you've heard me say this before, ladies and gentlemen. Okay? Stop paying attention to the financial media. Stop watching TV. Stop reading Yahoo Finance. Just pay attention to what's happening on your chart. The volume indicator is going to give you clues on what direction the market wants to go. Right? You can see right over here, we turned red. Okay, great. Let's start now looking for short opportunities. But just 2 hours later, you can see we turned green. If we're green, we're no longer looking for short opportunities. We are now looking for what? We're looking for long opportunities. We're a buyer, okay? Now, how many of you guys out there got caught on the wrong side of this trade? Okay? I bet you thought today and tomorrow were going to be some sell-off days. You were looking into your crystal ball thinking that the S&P was going to plunge today and tomorrow, and it might plunge tomorrow. I don't know. You don't know. Nobody knows. We are going to try to follow the volume and listen to what the volume tells us. But as of right now, what do you see? Right? It's green. When it's green, we are long and strong. Shame on you if you tried to take any short opportunities today. Okay? Especially when the market was so obviously going up today. I mean, it was green all day. I don't know what you're looking at if you tried to short the market today. You didn't have the volume indicator for sure, right? You probably were looking at some of this nonsense. Maybe this is telling you some type of garbage or amateur signals, right? And that's what this is for. Those are the people that use candlesticks. Amateurs. People that don't know what they're doing. If you want to find the direction and consistently get the direction right on a daily basis, folks, you have to study volume. Anyway, so let me talk to you about the retracement method versus the aggressive method. Okay, I'm still conflicted. You guys know that. There are many valid use cases for the impulsive method, and don't worry, I'm going to explain to you impulsive versus retracement right now. And there are also many valid use cases for retracement entries. What does a retracement entry mean, right? Well, last week I did a quick sample for you guys on a short example. So today what I'm going to show you is a long, aka bullish example. First, let's just go ahead and clean up the chart a little bit, create some space here for us. And all right, watch this. So guys, a retracement pattern on any chart will always have 3 legs to that pattern. Make sense? So let me outline for you what are the 3 legs of any retracement pattern. And I can promise you guys, if you can master what I'm going to show you here, you're going to transform your trading starting tomorrow. No, starting today. All right? So here is what a retracement pattern looks like universally. Okay? Everywhere, every market, every chart, this is what a retracement pattern looks like. There's 3 legs. Leg number 1 establishes the market direction. All right. With any retracement trading strategy, the first thing you need to be mindful of is what direction, okay, what direction you want to play that day. And leg number 1 of this retracement pattern establishes your trading bias in terms of a direction that you plan to trade in any given day. If leg number 1 is upward sloping, as you can see right here, this is a potential bullish opportunity and we're looking for longs. And of course, if the first leg, which is what you see right here, is downward sloping, that would be representing a potential short. Okay. Now this is just the first leg. We're not done. Remember, there's 3 legs to any retracement pattern. And while the first leg is important, it is nowhere near as important as leg number 2. Okay, leg number 2 right here, this is the retracement. Okay, ladies and gentlemen, there is nothing more important than being on the lookout, being alert, watching the chart, and really paying attention to when leg number 2 shows up. Okay, because when leg number 2 shows up, I am telling you, boy, the opportunity to make a lot of money is right around the corner. In fact, you should be drooling, you should be salivating, chomping at the bit whenever leg number 2 reveals itself on this retracement pattern. And of course, guys, leg number 3 is the money move. Leg number 3 right here is what pays you. And this is the area right here where all the retail traders and the amateur traders try to pile on. Of course, as you know, they're way too late to the party, right? While the smart traders were getting in on leg number 2 here, as I mentioned previously, this is the most important leg, right? All the retail traders and the amateurs, they're piling in over here, or they're trying to maybe open up a short position here. I don't know why. There's no short signal at all. But you get the idea of what a retracement looks like. Does this make sense, ladies and gentlemen? Tell me if it doesn't, all right? If this doesn't make sense, let me know, okay? But I don't find anything that I'm describing here to you guys to be complicated or confusing. This is easy peasy. Now look, let me blow your mind here and bring this home, all right? Let's go ahead and superimpose this retracement pattern onto today's action. And isn't that interesting? So leg number 1 nails the direction. Leg number 2 is the textbook beautiful retracement. In fact, let me just go ahead and clean this up a little bit here. Let's look at this retracement here, okay? There were only 2 opportunities in the last 24 hours. If you missed these 2 setups in the last 24 hours, you got nothing. All right? You were stuck trading this garbage over here. Okay? So why did I highlight these 2 areas on the chart? Why were these 2 statistically significant? Well, when you deploy a retracement strategy, the only thing that you're waiting for on leg number 2 is the first green bar after any red bars. Again over here, the first green bar after any red bars. This has to take place, guys, while the retracement is underway. And yeah, you lost 1 bar on the first setup. But how about the second setup? Ripping for 30 freaking bars. Okay, shocking the amateurs, shocking the retail traders, throwing all of them out into the trash heap and the garbage pile, while the market did nothing but print money as it trended in our favor today. Folks, this is how professional traders make money at the expense of retail traders and amateur traders. Guys, you have to decide, do you want to be a retail trader for the rest of your life? Do you want to be an amateur and try to just fuss around here and there, figure things out on your own, stumble and bumble around, right? Or do you want to learn, and do you want to use a simple volume-based indicator that does nothing more than color the direction for you on the chart, thereby allowing you to catch massive winners on a weekly basis, okay? Get off the sidelines, get involved. There has never been a better time to trade these markets, speculate in the market. You know the market's on fire. We all know that. And let's go out there and get at it. Guys, that'll do it for this video. If you'd like to get your hands on this powerful volume indicator, then get in touch, call, text, email, whatever's convenient, and I'd be happy to hook you up with a free one-on-one demo, really show you how this volume indicator is going to supercharge your trading. Guys, thanks for watching this video, and I'll see you on the next trade.